Hello and welcome to another episode of Fintech Focus TV with me, Toby. And today I'm absolutely delighted to bring to you Mark Hartley of BankiFI. Mark, how are you?
I'm really good, thanks, Toby. How are you?
Very good indeed, thanks. Very good indeed. So listen, I'm really excited and we've had a little bit preamble before off camera to talk about BankiFI. And it sounds like an amazing journey you're going into, and I'm really excited to sort of take the viewers and listeners through what we're going to be talking about a little later on, because I think there's 3 or 4 very meaty subjects here that I'm excited to unpick a little bit more. But before we do that, can you give us a little bit of a background about yourself and BankiFI, please?
Sure, yeah. So I've been in the financial technology industry for about 25 years. So I always find it a little bit amusing when we talk about fintech, I suppose, created in the last 10 years. So my journey started back in the 90s when I was involved in a cash management startup. And actually the seeds of BankiFI were really started in those days, because I was doing some work with accounting packages and over in Australia, actually. And we were trying to get direct feeds from accounting packages into banking cash management software. And I could never work out why there were two things that to me looked like they did the same thing. So the seeds of BankiFI kind of happened all the way back in the 90s, as I say, and then I went on to do a payments business with 5 friends, a company called Clear to Pay, which we exited in 2014 to FIS, and I kind of combined the two things, so the payment side of the business and then the cash management side of the business, and we set BankiFI up in 2016. With the kind of seeds that open banking and PSD2 and these regulatory changes and APIs and all these things were coming along. And we took a very different view that PSD2 and open banking was going to be a major threat to banks, and actually said it's a massive opportunity. And what we do at BankiFI is we kind of flip the whole fintech story on its head. And actually what we're trying to do is help banks move into the 21st century and think like their SME customers. So we're not doing anything with retail banking. We're not doing anything with anything other than SME and business banking. And what we're trying to do is help the bank to think about what a business does and needs. So we kind of round out those services to help things like invoicing, collections of money. So the whole order to cash, procure to pay, all your admin things that you don't really have time or want to do as, say, a sole trader or a micro business. And as a larger business, things like matching and reconciliation, it's all that kind of stuff. So what I describe as beyond banking services, that's what we do at BankiFI.
I think it's really interesting there that you touched on it about the sort of fintech aspect of it, because fintech is one of those words, isn't it, that means so many different things to so many different people. And you speak to one side and it's all about payments and such like. You speak to another and it's capital markets. You speak to another, and people all have all these different sort of morphisms of what what fintech is. Financial technology is very interesting, as you say there. I would always say that we are a financial technology recruitment business by trade, as opposed to pure fintech, because it's just so generic in terms of where it wants to go. Tell us a little bit about your view of the whole fintech moniker.
Yeah, I mean, we talked about, you see it all the time, the unbundling of banking services. You've seen some very successful businesses that are kind of picking monoline things away from banks or other financial institutions, and that's all good. I think the levels of competition that creates are really good for everybody, right? Whether you're a consumer, small business, large corporate. But I think it was Bill Gates in the 80s came out with something along the lines of banks are dinosaurs. We need banking, but we don't need banks. That's proven to be a prediction that Bill got slightly wrong, right? Because banks have been around for 300 years. They're going to be around, right? So I think banks need to evolve. Fintechs have put a great deal of pressure on them. You're going to see fintechs that do things that banks do or financial institutions do, and then you're going to see other fintechs that partner with banks. And I think there's going to be a lot of evolution. But banks aren't going anywhere, right? They're going to be around. They're just going to probably have to change and adapt like everybody does to meet the demands of their customers. And that's ostensibly what we're trying to do, is help them think like their customers and meet the demands of what their customers require from them, which will be different from what they required in the 20th century and before that. There'll be different requirements as we move forward.
Yeah, I think it's gone from the last decade, seeing it gone from the sort of real challenge and disruption of banking sector through to how, and I think the banks have been quite agile about this actually, and I think they've sort of embraced digital transformation and customer experience by partnering with. At one stage it was like, here's the fintechs coming against the banks, but I think actually they've sort of recognised that there's a merge of the two, and both need each other to really thrive as best they can. I think it's very interesting how you say that. The other thing you touched on in your intro there, I think, is something which has been really, really interesting, which is the massive challenge of late payments into the small business arena. That's been well spoken about, and I know that's another area that we've seen an awful lot of solutions come into, particularly over the last year, where it's been the sort of, I guess, mot du jour for SME businesses to feel that pain, and with late payments that have been coming into there, this is something which you've picked on very significantly to improve this scenario. Tell us a little bit about your thoughts in that area.
Yeah, I mean, it's a real major area of focus. I think it's very interesting that the fintech arena and banking potentially as well has been very focused on the whole working capital lending aspects of the SME. And you've seen the bank remedies, or the RBS bailout money, the Innovation and Capability Fund that was dished out to various organisations. A lot of that went in lending or making SME lending better. And I kind of looked at that, and it always seemed a bit of a self-fulfilling prophecy for me. If you're a lender, you're going to be saying, yeah, it's really important that we make lending much more simple to get money out to these businesses that are in desperate need of it. But actually, you look at the stats and the data behind it. The FSB did a paper back in 2016 that talked about 50,000 small businesses going to the wall each year because they're not being paid on time by their customers. The average outstanding payment amount was £6,000, about £6,000, which might not seem a lot of money to larger business, but if you're a sole trader or a micro business, £6,000 per late payment adds up. 36% of organizations were saying that they had to borrow money because of the late payments challenge. So when you look at the late payments challenge and put that into the context of, if we were to solve that problem, then there perhaps wouldn't be such the reliance on the lending requirement. And then you overlay that with what's happened with COVID. I think the Celent report talks about 80% of our small businesses have invoicing terms of 30 days in the UK. And even prior to COVID, the average late payment was 26 days. So on top of your 30-day credit that you're already giving, you were waiting another 26 days to receive your money. That's gone up to 71 days since COVID. Right. And in the European Union, we're talking about 23% of all invoices not being paid at all anymore since COVID. So is that 20?
That's 23% of all invoices.
Sorry, an increase of 23% of bills not being paid. And then you think about Bibbles and Sibbles. So what we've actually done is push money onto these organisations that are already getting paid late. After their interest-free holiday on paying their money back, they're going to have to pay the interest and the capital down on these loans. And if your customers aren't paying you, then you're actually compounding the problem by actually allowing customers to borrow more money or pushing money on them by lending. So my big thing about all of this and what we're trying to do is actually, let's solve the late payments problem. Let's get there's a code of conduct. The Small Business Commission is pushing that. Let's make sure that people are paying their bills on time, whether that's consumers or other businesses. And in fact, larger businesses are the ones that are tending not to pay the smaller businesses on time. And there's a lot of this late payments problem is locked up between bigger business not paying the smaller business. So I think we should have a much bigger focus on that late payment than we do. And that's where things like open banking and request to pay and accounts receivable management and collections, automated collections with straight through processing, that's where we can see a real big indent into solving that late payments problem.
You mentioned there about the sort of open banking opportunity, and I like what you said earlier on off camera about this sort of being the coming of age of the open banking arena, and it certainly feels like that. I mean, the conversations even this year that I'm having are non-stop around the sort of benefits of open banking. I was speaking to a friend of mine recently who's looking to make some acquisitions in the space for a major company that he's involved in. He was talking to me just this weekend about the sort of the massive scale of opportunity within it. So tell us a little bit about this sort of coming in of age and where the benefits lie, and why now we're seeing this sort of I almost said hype cycle then, which shows that I've been talking a lot around blockchain of late. But talk to me a little bit about about why it's so and why it sort of continues, and why it is the future as opposed to another one of the sort of knock at the doors in the fintech world.
So I think open banking was launched in January 2018. There was an awful lot of really poor use cases for it. I mean, there was things like account aggregation. Everyone, was it really going to make any difference that you could see all your balances of your accounts in one mobile app? And a nice convenient service, but the question is, with all these things, how are you going to make money out of something like that, right? And I also think the banks did a really bad job at articulating to their customers what open banking was, to the point where I think they were telling them and it was dangerous and it was insecure, and I think there were some really bad examples of that. As we talked about offline, no one talks in terms of value and benefit. No one articulates the benefit of open banking without mentioning those two words, open banking. So we try and avoid talking about open banking and talk about the values and benefits. So great example of that. The OBIE through Simon Lyons have been doing loads of work with people like HMRC, the Department of Work and Pensions. HMRC, for example, now they did a tender at the end of last year where open banking payments have to be part of any form of payment scenario that you pay your tax obligations through. So it's actually starting to have meaningful use case around it. And I've referenced one already. I think the combination of open banking with request to pay services to help customers get paid on time, to help solve that late payments challenge, is a really good use case. And when we talk about how an open banking payment works, all it is the end user using their existing bank account with the credentials that they use to make their payments from their mobile app or their online app. That's all you're doing in an open banking scenario. You're facilitating something that customers already do. Now, where it's really beneficial, and we've launched a service called Incoming at BankiFI, which is helping sole traders collect money more quickly. And sole traders don't take cards. We know that card payments are an incredibly expensive way for small businesses to acquire payments. So if that's you pay a percentage of the transaction fee. So if you're only taking a 40, 50 pound or potentially less than that, the percentage that you're being taken that's taken off you via a PayPal or a Stripe or a SumUp or whoever it might be, that becomes cumulative. That becomes very big, and then you've got to have infrastructure around that. So a great example is the good old QR code that we've all been really learnt about this year because of the NHS app, right? So there are the great applications out there that allows a sole trader to come into your home. Say electrician comes into your home, does fixes your electrics, and then creates an invoice that's rendered on a QR code, and you hold your phone as the payer over that, and it redirects you to your bank and you pay. That means that the electrician gets their money immediately. They don't get a load of card fees that takes money off them. You as the payer have paid that. And by the way, you've just used open banking and you didn't even need to know about that. But both parties in the payee and payer have benefited from that scenario. And so a great example there of how COVID has actually helped, right? We all might have known what a QR code was, but we're now all using QR codes when we go into establishments that, and now we know that you can securely use that to make a payment. So that's a great example. And I think, we saw last year 2 million payments or 2 million users of open banking payments in 2020. That'll just start to proliferate and go through the roof now that HMRC, DWP, and other parties are starting to use meaningful services that have those two things, value and benefit. We don't need to talk about open banking. We need to talk about value and benefit.
I couldn't agree with you more about that. I'm so pleased you said that, because it's to me, this whole, everything about financial technology has to be summed up around those words, doesn't it? Value and benefit. It's people will call it friction reduction, people will call it customer experience, people will call it all sorts of different things. But realistically, if you boil it all down, it's how can you make everything more efficient for everyone, and how can you make it cheaper and easier and easier effectively is where we're looking at with that. And I think the I guess the journey, and this goes from capital markets through to retail banking, all the way through it. When you look at banks, it's a revolution as much as an evolution over the course of the last year, where people have really started to think, right, we need to think a lot more with a lot more agility, and we need to think in the shoes of our customers. And I think when people start to do that, and it seems funny, doesn't it? And this has been my sort of soapbox moment where I've stood on it for the best part of a year now, really sort of proclaiming about how far the financial services arena has been behind the retail sector in its ability to really utilize e-commerce in the same, or the whole construct of e-commerce in terms of how it can be made an easier process for the end user. I know you've got thoughts around the banks thinking like customers. Tell me a little bit about your mission there.
I think that we're on the cusp of the next kind of big thing in fintech. You mentioned blockchain, you mentioned we talk about AI and machine learning all the time. One of the next big things is going to be this concept of embedded finance or embedded banking. And this is where customer experience and the way a customer thinks and behaves has radically changed because of digital experience, right? I always liken it, you go into a shop to buy something, you don't go into a shop to pay for something. That's the bank's view of the world. That it's all about the payment. They're only interested, but the experience that a customer has started way back before they went into that shop. They probably researched and thought about that. The item that they want to buy, they've gone into various shops, they go into the one they want to buy from, and then they actually end up doing the transaction. That's part of the process. So it's an embedded piece of the process inside their whole way of thinking. And that's what banks need to do. So if I put that in the context of what we do with SMEs and how we're trying to help SMEs and how we're trying to help banks help their SMEs, as a small business owner, I don't wake up in the morning and think, who have I got to pay today? I think about my suppliers. My supplier, I put out a purchase order, they sent me an invoice, I need to settle that invoice, and that needs to go into my accounting package, that needs to be matched and reconciled. I then need to do my P&L. So I think in terms of processes, and small businesses think in terms of process flows. They don't think in terms of product. They don't think in terms of business current account or loan or payment. They think about the things that they need to do in this concept of a process or a workflow. And that's what embedded finance is. Where can you embed banking, or where can you embed financial services into customer experience? I think the accounting package vendors are starting to do this really well. The likes of PayPal and Shopify and Stripe are doing it brilliantly. You can go to Stripe with their product atlas, and you can open your business from registering your company at the appropriate authority through to opening a bank account, through to sending it. You can do it all in one place, and they make the journey so much more straightforward. That's how banks need to think. And if they don't think like that, then they're going to be left being an organization that has the costs of running bank accounts with no relationship with their customers, because the people that have thought about it have thought it in the same way that customers think, have built those services and embedded those services in the way that the customer thinks, rather than saying, I'm going to try and flog you a loan or a business current account or a payment. They need to think of it in that much broader context of how we customers think. And I think that's the next big thing in the fintech world is embedding financial services in much better customer experience, including the banks embedding the services that they need to help businesses run. So invoicing, accounting, invoice financing, in this holistic experience that you expose through your online banking channel or your mobile channel.
Yeah, I think that's yeah. To me, be it B2B or B2C, that there's huge opportunities there, because the whole one-click experience of Amazon and Google and everything like that. The digital expectation of the consumer has just been driven forward so much, and I think this last year has been, has oiled that, incredibly over over what we've seen from it. And so and one of the things that we've tried to do throughout the last year in this show is sort of look for the opportunities rather than the negatives, and see the positives from that come through from this. Because, as I said before, the media has been a year-long battle of doom and gloom, and we've tried to show the sort of good news stories that have been out there from all of this. And it's companies like yourself who I think of. And look, I know you started in 2016. You sort of really got moving in 2018. It's quite early in your journey as a business to be thrown the curveball of a pandemic, but also, and probably this is one of the sort of byproducts of all this is Brexit sort of got pushed to the back of the news, but it's still very much there, right? Yeah. And so when you've got this sort of perfect storm of a young business of a global pandemic, people being forced to work from home, Brexit still there in the background, there's quite a swell of difficult things to be thrown at you quite young in a business, but you guys have somehow managed to push all that together and come out even stronger from it. Tell us a little bit about your journey there.
Yeah, I mean, you're right. It's been, I mean, I think the way I described 2020 it was a mixed bag, right? So, at the start of 2020, we had ambition and plan to open an office in Singapore and Australia to expand our capability. And obviously the pandemic came along, and that kind of put the kibosh on doing that in 2020. Having said that, being a technology company with a no paper policy from the outset made the transition from being in a physical office location going to a remote location for everybody was literally like, well, instead of working from home 1 or 2 days a week, everybody going to have to work from home every day of the week for the foreseeable future. And I think we said just before we came on air, I haven't been back into our office since March of last year, but the transition in the business to do that from physical to remote was like clockwork. Nothing really changed. I think the big challenges, we grew probably by about 50% in terms of staff last year, and a lot of our employees and new colleagues have never met one another as a consequence, right?
Yeah.
The whole interview process, the whole hiring, onboarding, and building new relationships over these types of things is so much more difficult than it is by physically meeting people. So that's been a challenge, but the guys have embraced it brilliantly, and got on with it, and it's worked fabulously well. In terms of Brexit, you're right, that kind of it almost became the forgotten news story, right? That we'd never heard anything other than Brexit in 2019, and then it was taken over by COVID for 2020. But I actually think there's some really interesting things that have happened as a consequence of COVID with Brexit, right? So the move to remote working and people's desire to get a better work-life balance. And, I think for me, it's not about we won't go into the city centre anymore, we won't go into the office anymore. I think what people have worked out is the commute that they do is a thing that they don't want to do. It's going to the office and coming back from the office. If you live an hour outside London or Manchester, people are thinking, do I really want to do that when I can work at home a couple of days a week? And I think that's going to change the dynamic of where you live and where you can work. And that has got to be a good news story for provincial cities like Manchester, right? Because I think it's going to make people don't feel that they will necessarily have to be drawn to go and work in London because, that's where the epicenter of everything was. It might be that actually I can live in the Midlands and work for a company in Manchester now, or I can live in, north of Manchester and work in, in Manchester. And I think that against the backdrop of Brexit is actually really healthy, right? I think the provincial cities have got to stand up and be counted. And I think this came out in the Khalifa report. The government have got to do things that make it that diversify, the industry that we're talking about now, fintech, that make it attractive for companies to set up outside of London. And that might be things like, lower VAT rates, lower corporation tax rates, government incentives and grants to have, fintech services in different parts of the country that give people who live in different parts of the country an option to have a career rather than be drawn to having to, do everything around the southeast. So I'm very bullish about actually the opportunities that the combination of COVID and Brexit have brought. And I think we've got brilliant educational establishments here that lots of people come to Manchester because of the nightlife and the way of life here as a student. Why don't we make sure we attract them to stay here by incentivizing them with, better career opportunities? And to that point, one of the things that we've done over the last 24 months is, we have this model that we call youth shoring. We want to give local people the opportunity to have a career in our industry, right? Instead of outsourcing it, overseas or to other parts of the country. So we've been working very closely with a couple of organizations that take people who've retrained from previous, employment careers that they've had. So whether that's accounting or, selling for Sky or working for one of the big four, which is three of the people that I'm referring to, they've paid for themselves to train as software engineers. And we've, taken those people on and given them their first job as a software developer, rather than saying, well, I can go overseas and get, a finished article for half the price. We want to give people locally that opportunity. And it's things like that, and we've got a massively diverse group of people that work for us in very, very different parts of the world. So we've got developers in Hungary, in Romania, in Serbia, in other places, and the glue of all of that is they all came to Manchester to either study or work. And post Brexit and in COVID, a lot of them went home because they wanted to be near family and stuff. So we've actually created this place where we've created something in Manchester, and then other people have gone to different parts of the world and they come back and so forth. So it's kind of an interesting model. But yeah, I'm very bullish about how Brexit and COVID have actually created much more opportunity for people that are prepared to embrace change than than anything else. And that's the key, right? If you're prepared to go with it and work in a changed environment, I think there's much more opportunity than there is threat.
Yeah, I think that's there's ways of looking at these sort of things, isn't there? And I think the people who've I've termed this before, played offense rather than defense on the whole thing, have actually seen the opportunity. And I love seeing businesses like yours who've decided to look at emerging talent. And I sort of stress emerging as opposed to young talent, because I like the way that you've looked at it in different areas and seen people from different backgrounds. And I think it's been a difficulty because of the nature of not having it in the office and having the learning by osmosis and the water cooler chats and all those different sort of things. But there's been ways and means of doing it, and you guys have obviously been able to do that and thrived and shown that opportunity. And I think that there's a very difficult year or two coming up for businesses, for young people coming into the industry, or unskilled people who are going there, where people still play with a bit of caution around rebuilding and reinvesting. But it's those who've taken the initiative, for me, and you spoke about this from the doubling of your team. It's not uncommon. There's a number of businesses who I'm speaking to every single day who've doubled, trebled headcount, and really sort of seized that initiative over this period. And I love hearing about those sort of things. You're absolutely right in terms of places like Leeds and Manchester and those sort of areas, about how this can thrive in a different way, and people looking at things from a slightly different perspective creates a lot of opportunities at the moment. And
I think it's very easy. It's very easy to moan about London gets all of the opportunity, London gets all of it, and I think you just got to accept that London's a world-class city. It's the capital. It's where everything gravitates to. There's no point in trying to compete or moan about it. You've just got to take the opportunity to find your niche, and that might be in specialization in certain areas, or in certain areas of the industry that you're in. But I just think, use the word emerging talent. I think a lot of what I've heard over the last 5 years about the complaints of the challenges that companies like ours outside of London have it, and everyone says, oh, talent, it's really hard to find talent. I think that's the biggest load of rubbish ever. If you're trying to find the finished article and you're trying to find someone that's got, that can come into your company on day one and actually be productive and be exceptional, that might be true. But if you're prepared to invest in people and you're prepared to say, you know what, we're going to build a team and we're going to help you grow with us. And, I think there's an awful lot of people out there that are very much prepared to try something different and, have got the right types of attitude as much as the skill sets that they have. And a lot of this is about attitude to learning, progressing, self-motivation, self-desire to improve yourself. You don't have to go and find someone who's been coding for 10 years to get an exceptional coder. You can find someone who's been doing it for a year, who's good and will become the exceptional coder. So it's about investing in people, and that's what we're going to do. And I think you generate quite a lot of loyalty through that as well by people Absolutely. Recognizing you're giving them a go. They'll always look favorably on you as a company and an employer. If you give them an opportunity, they'll have. It builds a much better bond between the company and the employees.
I think that's particularly prevalent when you look at the there's reports that come out every year of the average tenure of technologists, particularly in the sort of big tech businesses.
Yeah.
And it's coming down to a year, 18 months, etc. And you're right. If you can get that longevity and build people with that loyalty into those businesses, particularly in your sort of growth sort of phase, I think it's so important to have that, rather than constantly changing the narrative and reculturizing people into your environment. So I love what you've done, and Mark, I knew it's going to be a fascinating conversation, and it's proved to be just that. For people who want to find out a little bit more about you and BankiFI and such, like, what's the best way of them reaching out to you?
There's probably 3 ways. You can find me on LinkedIn, email address mark.hartley@bankify.com. Or the other one is our little foray into helping the small businesses directly. So we built this company called Incoming. So Incoming with an E. So it's a play on income as opposed to incoming finance as well. And you can find us there. There's a website, www.incoming.co.uk as well. So any one of those ways, but LinkedIn or email is the best way to get hold of me. And I'm always happy to field chats, calls, anything like that around the industry. Always happy to do that. So I'd love to hear from people.
Mark, it's been an absolute pleasure. Thanks so much for sharing on that. And I feel like there's a whole lot more to unpick as well. So hopefully we'll see you again on another episode.
Yeah, likewise. I enjoyed it, Toby. Thank you very much. And yeah, let's do it again sometime.
Definitely will. Thank you all for watching. We hope you've enjoyed this show, and we'll see you soon in another episode of Fintech Focus TV. Thanks a lot.